Hello, a very good afternoon and welcome to HYCM's webinar FX Week Ahead Live Market Analysis with myself, Giles Coughlan, the Chief Currency Analyst here at HYCM. Hope everybody is doing well. Apologies if you didn't get a link for this meeting. I know someone did contact me in advance, so they didn't receive a link. So if that's you, I'm sorry if you struggled to sign in. Don't forget, we've got the chat box, question answer box. Please do let me know any questions you have as we go through the session so that I can be answering those questions. Hope everybody is doing well. Just as folks are coming into the webinar, don't forget that this webinar is an educational webinar designed to help you guys look over the shoulders of someone with a professional trading background, so you can see how I go about making decisions, analysing the market, and just one moment while I turn my squawk off. Just help you to see that as how I go about making trading decisions, etc., etc. And hopefully that's an educational experience for you, so you can understand how that works. And without further ado, we'll get stuck into the session, and I'm going to go over to my trading screens. Now, this week, the market has started with a strong risk-on sentiment. So risk-on markets are typically when we'll see strength in the high betas, the Aussie, New Zealand dollar, Canadian dollar, and we expect to see weakness in the safe havens, the Swiss franc and the Japanese yen. So let's just take a look at that and run through that. And also run through the reasons for the optimistic markets. Now, markets are optimistic at the moment, and the reason for the optimism is that there's been general follow through from last week on vaccine optimism. Now, the vaccine optimism has been that there's a report out over the weekend that vaccinations could start in the US in as soon as less than 3 weeks' time. That means that the rollout of a vaccine is obviously a very good news for global growth. Now, we've seen S&P 500 markets move up towards the top of their daily ranges, Dow Jones moving up towards the top of its daily ranges, NASDAQ finding some support, DAX pushing higher, finding support from the R1 resistance zone, similarly with the Euro stock. So equity futures markets have broadly been supported. Bond yields have also been higher. Bond yield gives us a good indication about future path of interest rates, and when the yields rise, that tends to be strong and positive for that country's currency and is good for risk. So in an ideal world, when risk markets are on, we want to see equity markets moving higher, which indeed we do. We can see that cash markets are moving higher. The red here in the US markets is because the US markets haven't opened yet. Asia finished broadly in the green, apart from the Nikkei. The European equity markets in the green, and we just had a look at the future markets, yields in the green. On top of that, we also see Brent crude and WTI crude positive on the day. We also see copper is a little bit lower on the day, the futures markets, but if you just take a look at those commodity charts, you see that copper has moved higher at the end of last week. So prices just staying at the top sort of quarter of last Friday's range. So that's pretty positive, even though we're not making fresh highs on the day. WTI crude heading into that near-term resistance level, but positive on the day. So taking that as a whole, we now look at the currency space and we see what we'd anticipate, which is broad strength in the commodity currencies, Aussie, CAD, New Zealand dollar, and broad weakness in the Japanese yen, Swiss franc, and we're also seeing weakness in the US dollar. Just going over, you can see this dollar weakness pushing further lower on the day. We've been pushing this very key trend line, massively key trend line on the daily chart. You see here going back all the way to 2011. So a break and close at this level is very significant for dollar weakness going forward, and definitely one to watch. Key resistance level, just going to move this trend line a little bit. Yeah, just look at this key. Ooh, let's just get the edge of that. Really want to get the edge of that. With the trend line, you see, when you see a clean break of these trend lines, it really does indicate further downside. So that's very important. If we get a break here today on a daily basis, yes, we've got near-term support at that 92 level, but a break and close below this trend line really does open up the opportunity for further downside. So definitely one to watch heading into the close. Now, of course, understand that the dollar is the king of currencies, and the dollar moves are seen throughout the rest of the major currency pairs. So this dollar weakness is on those positive risk-on tones. Now, that weakness in the dollar lifts all the other major currency pairs with them. So that's why we're seeing upside in Aussie, Euro, Pound, New Zealand, US dollar. Also, we're seeing downside in the US dollar CAD. So that means that as long as this positive risk sentiment remains, we're expecting further upside in the Aussie US dollar. We wouldn't want to buy at these highs, so we'd look for a break above and then a retest at that level, or a move back down to the bottom of that range. Set that S1 or that 7,300 level would be ideal for long. And New Zealand US dollar, again, look for a little pullback back down to that 6,940.50 region would be ideal for longs. The euro, now seeing a little bit of a mixed picture for the euro. If you just go and have a look at the data point we had out of France and Germany. Look, I'll just go to, that's the Bloomberg terminal. I'll just go over to the Forex factory because it's a bit easier on the eye. You can see here that French service PMI disappointed to the downside. Manufacturing was a little bit better than the market had expected, and as a whole, the flash services disappointed, but the manufacturing was a little bit to the upside. So a mixed bag out of the PMI data, but the reason for the euro-US dollar upside at the moment is this dollar weakness. And if dollar weakness keeps going, expect the euro-US dollar to keep moving higher. One thing to watch for the euro-US dollar is the ECB do not like a strong euro. Now, there's practical reasons for that. The practical reasons for the strong euro is that Europe is an export economy. A strong euro makes it difficult for European exporters. So the ECB want to keep the euro weak. They do talk the euro down. So if it gets much higher, as soon as we're in that 1.9 from current prices up to that 1.2 level, you know, watch out for ECB speakers to talk the euro down. So that's definitely a big one to be watching out for. In terms of biases, I do have a euro pound downside bias. I'll just explain the reasons. Now, looking at this pound US dollar, you can see it keeps moving higher. This is all on optimism that a Brexit deal is going to be struck. The market is in a very optimistic mood that a Brexit deal will be struck this week. That's why we're seeing the euro pound downside. So just go and have a, just going to cool up the, hang on, let's just get rid of that. Let's see if I can remove that. That's it, remove. There we go. Right, now just have a look at the euro pound. I'll show you. This is a trade I've just taken this morning, and I'll give you the reasons for it. The upside in the pound is expected on the Brexit optimism deal. The expectations are that some kind of deal is going to be struck between the EU and the UK. So when price moved back up to this level, in line with the slightly weaker than expected PMI data, particularly coming out of flash services PMI and the flash services PMI for the Eurozone, just a little bit of a negative going into the session. So we had a little bit of weakness in the euro, a little bit weak in the pound. Now, obviously, the strength in the euro has come in a little bit on that US dollar weakness. So in hindsight, it probably wasn't an ideal trade in terms of not everything was lined up for me, but I did just enter this 0.8903, 0.8905 level, just looking for a little move back down to this 887580 region. That would be suitable for profit taken, given the fact that we're expecting Brexit optimism and the slight disappointment with the Eurozone PMIs. Now, I would not enter this trade now because that opportunity has gone, and I wouldn't take fresh euro pound shorts now. The pair that I'd be looking at potentially would be something more like a pound yen long, because we're seeing Brexit optimism remaining, and we're seeing a weakness in the yen. So any retracement of, let's just look at some more pivot points here. So I think any retracement back down to that sort of 138.50 level would be excellent for pound yen longs, and any sort of level there would be very good and well worth looking at moving forward. So obviously the reason for this is that pound strength on the Brexit optimism and yen weakness on the fact that the market is in a risk-on tone. So pound yen, pound Swiss franc, pound US dollar, all those kind of trades look potentially good for today. Now, a couple of things to be aware of. The risk to the pound, obviously, if no deal is going to get done, and this is what you need to look for, okay? If we get a scenario where PM Johnson or EU's von der Leyen walks away from the EU-UK trade deal, then that would be very pound negative, and you'd expect heavy pound selling. And if there's a no-deal Brexit, you'd expect the pound to sell all the way down to 1.2200. But no one's expecting that now. See the way the pound keeps moving higher? This is all on Brexit optimism. The news wires are full of this news. It's happening all the time. Lots and lots of expectations that a deal is going to be done. So that is the bias. You can see why. Look, all these dips in the pound keep getting bought over and over again. They have done over the last couple of weeks, all on Brexit optimism. Market remains exactly the same scenario. So that optimism is well and truly alive and here in the market. So that's one thing to keep your eye on and keep aware of heading into the US session. That's the dominant currency sentiment for the day. Pound, US dollar, pound yen, pound Swiss franc. If there's no Brexit deal, as long as the EU and the UK are talking, the optimism should remain. So that's the key thing to be looking out for. Now, if a deal, and when a deal is finally done, remember the upside is pretty much getting priced in now. And we are here in this key resistance level up at this 1.3400 level. So price moving into here, if a deal's done, you might get price moving up higher, 1.3550. But then don't be surprised if we see a buy the rumor, sell the impact kind of reaction. So that's what you need to be aware of if we see a buy the rumor, sell the impact reaction. So that's the risk of the pound. Upside is limited, downside is potentially large. So I hope you're understanding that. But if a deal was done and it's all signed and sealed, what you'd expect to see is pound move higher, and I expect to see the pound sell off. I'm not sure if we get as high as 1.4, but I would think we should get as high as 1.3550 on a Brexit deal. So that's a good sort of 150 odd points. So that's one to be looking out for moving forward. Now, in terms of risk events for this week, it's a very quiet week. Arguably, this has been the biggest risk event of the week, the Euro PMIs, and they haven't really moved the market much at all. Now, the reason for the quietness is that we have bank holiday beginning in the US on Thursday. So it's Thanksgiving in the US, holidays are expected, and we had a Japanese bank holiday overnight. So this is a shortened week. So you could expect main moves to be Tuesday and Wednesday this week, but potentially a very low volatile market. Look at Governor Orr speaking. That's going to be interesting. Remember, the RBNZ have recently changed market expectations at the last RBNZ rate meeting. If you look at the bond market, you can see the reaction. New Zealand government bonds, you can see them moving higher. Now, when these bond yields move higher, that strengthens the currency. General rule of thumb, stronger yield, stronger currency. So the New Zealand bond yield has moved higher because Governor Orr has said that he's expecting to have 100 less basis points of easing coming up. So going into the event, many people have been expecting around the summer anyway, the RBNZ to have move negative. They've walked that back. So look out this week to any further walking back of negative rates by Governor Orr. If he's sort of saying things like, we're going to taper quantitative easing, we're going to maybe we won't need to go negative at all, or we're maybe thinking of raising interest rates, then we'd expect to see that heavily support the New Zealand dollar. So again, this is a trade that I'm in. I'll show you this trade I'm in. The Euro New Zealand dollar, and I'm looking at the bond yields here. So I'll just show you this. Well, obviously, the breaking through this level here, I took a short around this 1.715 level. I've taken a short, and I'm looking for a move back down to the support level 1.6847. So looking out here. Now, I would expect Governor Orr to be optimistic, and obviously the ECB. I'm expecting further quantitative easing from the ECB at their next rate meeting in December. So I do see a good bias to the downside for Euro New Zealand dollar. You can see these bond yields. This is the bond yield spread between the German 10-year bond and the New Zealand 10-year bond. Those observant for you now, Schwa, yeah. That's not a double bottom to trade, because I'm actually short this market, which is quite helpful, Shra. Because look at this bond yield spread. You see, this is the bond yield spread. Now, look at this, Shra. This is the just had a question about whether this is a good double bottom, and it definitely isn't. This is the German 10-year bond. This is New Zealand 10-year bond. Now, the observant among you will notice that the reason we're looking at the German 10-year bond is because Europe doesn't have a bond, but Germany is Europe's biggest country. So the 10-year bond is traded as a proxy for a European bond. This bond yield spread is basically the risk profile between the two countries. So you can see, look, rising yield spread, rising Euro New Zealand dollar, falling yield spread, falling Euro New Zealand dollar, falling yield spread, falling Euro New Zealand dollar. So look, this yield spread is continuing to fall. That reason for that fall was that more bullish RBNZ. Governor Orr speaking, as I said, on Wednesday. This is a key one to be looking out for. This could be an excellent chart. So if Governor Orr comes out on, Wednesday and he's more bearish and said, oh, we might be having to go to negative interest rates, things aren't as good as I thought, then you'd expect the yield spread to spike higher, and that would be a great double bottom. You could just enter at market and ride it up higher. But if Governor Orr is, as I expect him to be, more bullish, more optimistic, then you'd expect the yield spread to drop lower, and you expect this to drop lower, moving back down towards this key support 16800. Now, Shra, yes, you could get a technical bounce here, okay? But all you're doing is you're not got the probability in your favor. When you're trading these kind of double bottoms, you see how the market's been moving down for a reason. That yield spread tells you what that reason is, okay? And I've told you as well that it's the RBNZ turning way more optimistic than they have been. So see the way the market's fallen. So now that the ECB are not wanting a strong euro. Their export market is strong, so the last thing they want is a strong euro-US dollar. So they might start talking the euro down as well. At the moment, that dollar weakness, that dollar weakness is moving the euro-US dollar higher. That's what's going on there. So, that's something to be looking out for going into the week. Nothing else much on Wednesday. Now, yes, Shra, still not retest daily trend line. Well, I think it has retested daily trend line, you see, because this is the trend line here. You got this key support. It was broken. Then you had another break and then a retest and another retest. So it has retested and is now moving lower. Okay, so I'd expect, I think Governor Orr will push this one way or the other, Shwan. Okay. Now, on Wednesday, and this is your other question, Shwan, could Brexit impact gold? In theory, it could. If there's a no-deal Brexit, you might see some inflows into gold. But otherwise, Brexit shouldn't impact gold. The way it might impact gold indirectly is if there's a Brexit deal, we may see a lot of pound strength, and a lot of pound strength might move the US dollar lower, which can give gold a little bit of an uplift. Because if you notice that when you plot look at the dollar index, if you put it on gold, you'll see that falling dollar, rising gold, falling dollar, rising gold, falling dollar, rising gold, rising dollar, falling gold. Okay, so falling dollar should equal rising gold. So that should be supportive for gold as long as that dollar keeps moving lower. Now, now this is key for gold. FOMC meeting minutes on Wednesday. Now, what's happening with gold market at the moment is that heavy selling that happened on the Monday, November the 9th, was on the Pfizer-BioNTech vaccine news. Gold futures also had their biggest drop in about 7 years. They just tanked on that news. And the reason that tanked is that the expectations are that, you know, life gets back to normal. And you see the US 10-year bond yields, they moved much higher, moving up towards 1%. You can see here that 10-year bond yields moved up towards 1%. And that was all on expectations that maybe life will get back to normal. So the FOMC minutes will be eyed very carefully, particularly because US Treasury Secretary Mnuchin has had a kind of a disagreement with Fed's chair Jerome Powell, and this has raised question marks about, is more stimulus coming from the US administration and is it coming from the Federal Reserve? The FOMC minutes on Wednesday will be important. If the investors and traders read the minutes and think, yes, there's more chance of stimulus coming from the Fed, expect that to boost gold. At the moment, gold is just finding a little bit of support here, but I have a neutral bias on gold at the moment, just waiting for some near-term direction on it. But FOMC minutes, and what you're looking for in the minutes, you're actually looking for, is if there's more chance of stimulus from the Fed, then expect that to support gold. The more stimulus we get from the US administration, from the Fed, low interest rates, high QE, high stimulus, that's all supportive for gold. The other thing to be looking at for the gold market is if we see a surprise win in the Senate for the Democrats. If we see a Democrat win in the Senate in the US, and then for the Democrats have the House of Representatives as well, then that would be a bigger stimulus package, more upside in gold. So definitely one to be looking out for moving higher. Going back to the charts, we see that on Thursday, very quiet, bank holiday starting, and Friday are very quiet. So it should be a very, very quiet end to the week. So Tuesday and Wednesday should be the main trading days this week. I would advise otherwise, you know, just stay out of the market. Probably on Thursday and Friday, you get low volatility. So in low volatile markets, you see one of two things. You either see very, very narrow ranges, or you can see some very wide ranges if there's some news that's positive for markets that can really move the market exponentially large amounts because there isn't the orders to fill, so you can get big price jumps and gaps. So that's why sometimes when people are away from the market, you can see larger swings in price because there just aren't there in the market to have the normal ebb and flow. So you tend to get gaps and large price voids, which just has price ripping through them, trying to find liquidity, trying to find other orders to pair them up with. So that's why you tend to see that. Guys, I hope that's helpful. Bit of a quiet week heading into November, so nothing else much on the calendar. Again, look at the risk tone, keep looking at the risk tone, go along to websites like forexlive.com and you can find out what the current risk tone is for the market. And I hope that's been helpful, and I hope that's clued you in for what's driving the markets as we start this session. Don't forget to be back here on Wednesday, and on Wednesday I will once again go through the dominant currency sentiment pair for trading, and we'll look through the rationale and the reasons for that. I hope you all have a very good week. Thank you all very much for coming. Thank you, Shwa, for your questions, and I look forward to seeing you. Take care, everyone. Take care, Yasser, Warren, good to have you, Yolanka, Lenny, Shwa. Take care, everybody. Thanks now, guys. Goodbye.